the hotel tax. Today, we'll do a general review or overview of the hotel occupancy tax. It will primarily focus on guidelines for cities and counties, and will cover the process for adopting the tax and the laws regarding the collection and use of the tax revenue. I'll be giving a general overview of the tax. It will primarily focus on guidelines for cities and counties and will cover the process of adopting the tax and laws regarding collection and use of the revenue. Texas has more than 600,000 hotel rooms in the state, and as of FY 2023, the state's hot revenue was just under $778 million, and 92% of those state revenues go into the general revenue, with the remainder allocated to the governor's Economic Development and Tourism Office to support tourism, advertising, and marketing activities. Hotels in Texas are very diverse and include a variation of types of rooms. For example, the Antlers Inn, as you see here, is a unique hotel in Kingsland, Texas, that offers 3 train cars that have been remodeled as rooms. Guests can stay in the train cars, cabins, or inside the hotel. Since the train cars have been improved to be used as a room for stay, they are treated as real property and the hot tax applies. The Antlers Inn has a total capacity of 25 people. On the other hand, or on the other end of this hotel spectrum, we have the Sheraton Hotel in Dallas. It holds a bragging rights for the largest capacity hotel in Texas, with a total of 1,840 rooms, 22 presidential suites, and 224 junior suites. Throughout this presentation, we will discuss aspects of the hot tax, commonly referred to as HOT. The hot tax is governed by the tax code. The statutes regarding the state hot tax are in Chapter 156. The hotel occupancy tax, which includes cities and counties, is governed by Chapters 351 and 352, respectively. The laws that apply to the hot tax are heavily bracketed. This means that provisions of the law apply differently in different jurisdictions and locales. This presentation will only cover general provisions of the law. The laws applicable to counties are more heavily bracketed than the law for cities. The laws governing your specific county or city may differ than what the information is presented here. We recommend that all matters regarding the hot tax be taken to your legal counsel. We have added this image to brackets to certain slides to indicate that the statutes regarding this area of the law are heavily bracketed. The law says a city or county may impose a tax on a person who pays for a hotel room. The purpose of the tax must be to promote tourism and the convention center and the hotel industry. The important thing to take note of here is the person paying for the room, not the person staying in the room. The significance of this will be explained later in the presentation. We have a question. Go ahead, Jake.
Addie Mendoza asks, bringing a 3-month exhibition such as Wonder Spaces to our community and using I'm just going to repeat this. Bringing a 3-month exhibition such as Wonder Spaces to our community and using HOT should be allowable as long as we use it for tourism and promotion of the arts, correct?
Correct.
Also, can we charge a fee so long as the revenue generated goes back to hotel occupancy tax uses?
Correct. The law says the city or county may impose a tax on a person who pays for a hotel room. The purpose of the tax must be to promote tourism and the convention and hotel industry. And I think I already talked about this slide, so we'll move on next. A city may impose a hotel occupancy tax by order or ordinance. For a county, the Commissioners Court may adopt an order or resolution to impose such a tax. The local hotel tax applies only to renting hotel rooms. The tax does not apply to meeting spaces or food served in the hotel. The only exception allowed is for package deals if the person renting the room pays a lump sum for the room, food, or any other services. The hotel tax applies to the hotel amount. Meeting spaces and food purchases still require sales tax even when the hotel tax does not apply. An example of this would be the honeymoon package that includes the room, meals, drink, and a massage. If billed as a lump sum, the entire package will be charged the hot tax. If they are separately billed out, the hot tax would only apply to the room. This would be cheaper for the customer to charge separately. Note that the state hot tax also applies to any room that is rented out in a hotel, such as banquet rooms, meeting rooms, etc., whereas the local hot tax is only charged on the hotel for the room commonly used for sleeping or for the lump sum package if billed as such. The hotel tax does not apply to permanent residents. By law, anyone who rents a room for 30 or more consecutive days is considered a permanent resident and is not required to pay the hotel tax. The comptroller rules define permanent resident as a person who has the right to use or occupy a room or space in a hotel for at least 30 consecutive days without interruption. A person may be an individual, an organization, a business, or an entity as defined under Chapter 3.161. The key thing to remember is from this is that the tax is charged to the person that pays the tax. If an oil and gas company rents out a room for 2 months, but has several different people coming through, the room is not taxable because it was paid for by the same company rather than each person that stayed in the room. So what is a tax or a hotel? As you can see here, there are many different types of what's considered a hotel, such as hotels, motels, tourist homes, manufactured homes, cabins, cottages, bed and breakfast, inns, lodging house, etc. We have a question. Go ahead, Jake.
Stephen Kirk asks, is the tax waived only on the beginning of the 31st day or for the entire period? And this is regarding, permanent residents.
It'll be the entire month.
Mm-hmm.
Hotel occupancy tax rates are set by the local jurisdictions, but they are subject to legislative caps. Texas law for county hotel taxes has been amended 56 times. County hotel occupancy tax rates range from 0.75% to 7%, depending on factors such as location and population. The statute governing the city hot rates has been amended 10 times. The hot tax for cities are 7%, 8.5%, or 9%, which are dependent on factors such as population and location as well. Go ahead, Jake.
Octavia Guzman asks about Airbnbs.
Yeah, go ahead.
That's just, are they included in the hotel designation?
They are included, but we will get to that slide. I have a slide on that coming up momentarily. The most common local limit is 7%. Most cities are allowed to set a hot tax in their city limits of up to 7%. Many counties are also able to set a hot tax rate up to 7%. Cities with populations less than 35,000 may also impose a hot tax in their extraterritorial jurisdiction, as long as the combined city, county, and state taxes do not exceed 15%. The state hotel occupancy tax rate is 6%. Be sure to examine the law and discuss the matter with your legal counsel to determine if the rate limit is, what the rate limit is in your locale. Go ahead, Jake. We have another question.
Christine Thomas asks, she says, I understand RVs are exempt from HOT, but what about RV parks that have STR cottages / cabins? Should they be subjected to HOT?
If they're considered as a quote cabin, that they would certainly meet the definition. If they are quote in an RV park, I am not sure at this moment. Go ahead and email me or Jake and we'll research that question for you. The local hotel occupancy tax is completely under the control of the local government. The city or cabin is responsible for setting the tax rate, collecting the tax from hotels, and assessing any penalties. The state, including the comptroller, has no involvement in the local hotel occupancy tax rate. The statute requires that the hotel owner or operator report the hot tax and submit to the county in whatever fashion is in the county order or ordinance or resolution. Technically, the statute does not have the same provisions for the city. It does, however, outline remedies for the county if a hotel does not report or remit. We urge all cities that have adopted a hot tax to notify all hotels in their city to ensure compliance with the city's choice of reporting and remitting the tax. Go ahead, Jake.
2 questions. Councilmember Parker asks who they missed, who sets the rate for the hot tax?
It'll be each taxing jurisdiction. In many instances, they'll, for certain circumstances, and this is where I would advise that you speak with your local council, that a lot of this is going to be determined by statute or needs to be included in statute if you're not already in statute or permitted by statute. So I suggest you check with your attorney on that.
Mm-hmm. And Shani Gamboa says, posing this to the whole chat as well. What is the best way to audit STRs, short-term rentals, VRBOs, EDC, in your jurisdiction to ensure appropriate hot funds are being collected / reported?
Well, certainly local should do their own audits of this, number one. Number two is that they can contact the comptroller office to see what we have in our files as to businesses that are paying, that we have on record as paying the state hot tax, or maybe not paying, maybe vice versa, where we have it on our list but not on yours, or you may have something on your list but not on our list. We can share. And so there's a separate office from the office that I and Jake are in, but you can certainly contact us and we'll redirect you to the correct person on that. Hotels are statutorily allowed to keep up to 1% of the hot tax collected to pay for the expense of collecting and remitting the tax. This includes the local and state tax. If a hotel does not file the tax report and remit the hot tax, a city or county can take actions against the hotel. A city or county can bring a suit against the hotel who has failed to file a tax report or pay the tax when due. The court order can also include the closure of the hotel until the tax is paid or the report filed. If a hotel owner or operator did not file the required tax report, the city or county is given provisions in the law to determine the amount of the tax owed. The city or county can conduct an audit of the hotel. The city may conduct the audit themselves or contract with another person to perform the audit of an hourly rate or fixed fee basis. The municipality must provide at least a 30 days written notice to the hotel owner operator of its intent to conduct an audit. The municipality may request the use of the comptroller's tax report to determine the amount owed to their local jurisdiction. Most hotels are required to report monthly to the comptroller office. You can request this report by contacting our Open Records Division. Lastly, if the hotel owner operator did not file their report to the comptroller for the same period in which they failed to report to the municipality, the city or county can estimate the amount due using the comptroller's tax report from the previous calendar year. In addition to the tax originally owed to the city, a hotel owner operator is liable for the municipality's attorney's fees, the cost of an audit if the tax has been delinquent for at least 2 complete municipal fiscal quarters at time the audit is conducted, and has not received a disbursement from the comptroller. A penalty equal to 15% of the total tax owed if tax has been delinquent for 1 municipal fiscal quarter, and interest. Regarding the disbursement from the comptroller, the statute requires the municipality to report to the comptroller if they discover in their audit that the hotel has failed to collect or pay both local and state hot tax. The comptroller will review the information and determine whether to proceed with the collection and enforcement efforts. If the comptroller collects a delinquent tax, a percentage of the amount collected will be dispersed to the city or the county. If a hotel owner fails to report or pay the tax when due, a 5% penalty is assessed on the amount due. An additional 5% penalty is assessed if the owner does not file the report or pay the delinquent tax within 31 days after the due date. Beginning 60 days after the due date, both the delinquent taxes and the assessed penalties will accrue 10% interest annually. And also, there could be a forfeiture of 1% collection fee. The comptroller office made an agreement with Airbnb and HomeAway for them to collect, report, and remit the state portion of the hot tax. On the hotel occupancy receipts report, each company reports for the hosts solely by city or county rather than listing each address, name of their host, or number of rooms available in each jurisdiction. We encourage local governments to routinely check these websites as well as other platforms for short-term rentals to determine or ensure that hosts in their cities are collecting and remitting the local portion of the hot tax. If a hotel owner still owes the hot tax when selling their hotel, the buyer must withhold the amount of the tax due from the purchase price until the seller provides a receipt showing that the tax has been paid or a certificate showing that no tax is due. If the buyer fails to withhold the tax due from the purchase price, the buyer is then liable for the tax. If the purchaser requests a tax certificate from the city or county, and the representative of the city fails to do so Within 60 days, the purchaser is released from the obligation to withhold the tax from the purchase price or pay the tax due. Federal employees, including military personnel, traveling on official business with a valid government ID card, are exempt from both state and local taxes. Foreign diplomats issued a hotel tax exemption card are exempt from state and local taxes. Some designated Texas state employees, mostly judges, agency heads, members of state boards, commissions, and the Texas legislature are issued a special hotel tax exemption, photo ID or card, making them exempt from all hot taxes. District attorneys as well as district judges receive a card from the comptroller office, making their stays at hotels in Texas exempt from state and local hot taxes. Texas governmental employees are not exempt from paying the hotel taxes, but their employer may request a refund from the comptroller for the hot taxes for stays while on official state business. By law, revenue from the municipal hotel occupancy tax may be used only to promote tourism and the convention and hotel industry, and that is limited to specific projects. The hot revenue may be used for the acquisition of sites for and the construction, improvement, enlarging, equipping, repairing, operation, and maintenance of convention center facilities or visitor information centers, and the furnishing of facilities, personnel, and materials for the registration of convention delegates and registrants. The hot tax can also be used for advertising and conducting solicitations and promotional programs to attract tourists and convention delegates or registrants to the city or area, and encourage, promote, improve, and application of the arts, which includes a variety of specific types of art. It can also be used for historical restoration and preservation projects or activities or advertising, and conducting solicitations and promotional programs to include or to encourage tourists and convention delegates to visit preserved historic sites or museums. And it can include expenses, including promotion expenses directly related to a sporting event in which the majority of the participants are tourists. It can also be used for the enhancement and upgrading of existing sports facilities or fields, if you have any field of dreams, used for district, state, regional, or national sports tournaments, and the construction, improvement, enlarging, equipping, repairing, operation, and maintenance of a coliseum or multi-use facility. Round Rock, as an example, collects 9% from their hot tax for hotel stays. They developed a sports tourism program called Go Round Rock. That generates approximately $16 million in economic activity every year in their community. They invest the bulk of their hot tax revenue on facilities and programs related to the sports tourism, including on the Dell Diamond, as seen here in the picture. Generally, the hot tax can be used for signage, directing the public to sites and attractions that are visited frequently by hotel guests in the city or county. A transportation system to transport tourists from hotels in and near the community to the commercial center of the city, a convention center, other hotels, and tourist attractions. Cities and counties may also pledge the hot tax revenue to pay for bonds used for eligible projects. They can also contract with other persons to manage their hot tax projects. Hot tax revenue may not be treated like general revenue or spent on general revenue or general expenditures. It is important to remember that revenues generated for the hot tax cannot be used for general revenue or expenditure purposes. We have a question. Go ahead, Jake.
Brandon Brown asks, can hot be used for maintenance on green space that is not adjacent to a hotel or convention center?
I would say with qualification, it potentially could, based on some of the definitions we talked about earlier, but I would confirm that with your attorney just to make sure. Local governments can contract with a person or another governmental entity to manage or supervise the hot tax funds collected and how and where those funds are spent. Individuals or organizations that contract to administer a hot tax project are required to adhere to specific provisions of the law. The City Council or Commissioners Court must approve the contractor's annual budget, and the contractor is required to submit periodic reports at least quarterly. The contractor must keep the hot tax funds in a separate account, and they have a fiduciary duty to administer the funds appropriately. The contractor must maintain complete and accurate financial records and make them available at the request of the local government or the public. A person receiving a grant from the municipality for the encouragement, promotion, improvement, and application of the arts may contract with another person for the project. In addition to limitations on eligible projects, there are also limitations on the expenditure of hotel tax revenues. The allowed expenses include day-to-day operations, supplies, salaries, office space rental, travel related to promoting tourism, and administrative and other necessary expenditures. Municipal hotel occupancy tax revenue may not be spent for travel for a person to attend an event or conduct an activity, the primary purpose of which is not directly related to the promotion of tourism and the convention and hotel industry. Hotel tax revenue must be allocated in specific proportions. This proportion of the law, or this portion of the law, is heavily bracketed, and we are only discussing general provisions that apply to cities. In general, a city must allocate at least half of the hot tax revenue to advertising. Up to 15% of the revenue, or an amount equal to 1% of the room rate, may be used for the arts. Up to 15% of the revenue may be spent on historic preservation and tourism unless a city is not allocating any revenue to the convention center or visitor center. In that case, up to 50% of the revenue may be spent on historic preservation. Because the law is so heavily bracketed, there is no general rule we can provide for counties. Counties should consult their legal counsel for determination of how their hotel tax revenue may be allocated. Cities and counties and entities they contract with to manage hotel tax funds must keep complete and accurate records. These records must include all tax revenue due and received, all expenditures made, and a list of all activities that will be funded by the hot tax. Cities and counties are required to report their hot tax information to the comptroller annually. HB 3727 and SB 1420 expanded the reporting period for local governments from February 20th to March 1st. It also requires that all cities and counties report all allocation of the hot tax revenue. Prior to these bills, local governments were allowed to just submit a link to where the information resided on their website. Now they must use the comptroller's form to report all the required information. Such a report requires information on the tax rate, amount of revenue collected, the amount and percentage of revenue allocated to use, total amount of revenue collected in the preceding fiscal year that has not been spent, and the amount of unexpended revenue, if any, that remains in possession in the fiscal year in which the report is due. Go ahead, Jake.
Clancy Harden asked, what happens if a community is allocating hot taxes improperly or exceeding the statutory limits?
If a community is allocating taxes improperly, then certainly someone in the city, the public, or some other interested party should certainly notify the comptroller office of this if the city or county is improperly allocating funds. SB 1420 and HB 3727 require that all cities and counties report all allocation of the hot revenue. Prior to these bills, local governments were allowed to just submit a link to where the information resided on their website. FY23 data will be posted, or 24 will be posted online by September 1 of 2025. That should already be out. So FY26 should be out for September 1 of 2026. And here we have the contact information. You can contact me or Russell Gallahan, or you can send emails to Jake, and we'd be more than happy to assist you.